My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends, just trying to make some money. My job is not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC or tweet me at Jimmy Chill Cramer. We want a healthy market where there are lots of ways to make money. But you know something? It is actually possible, not yet, to have too much of a good thing. You don't want a market where there are too many ways to make money. We aren't there yet. But after another good day where the Dow gained 238 points, the S&P advanced 0.74%, Nasdaq climbed 0.95%, we are certainly headed in that direction. All right, so look, how is it possible that we could have too many ways to make money? When lots and lots of things are working, you end up in a situation where investors take down tons of debt because everything seems can't miss, and every move feels like a super cycle, a kiss of death word, super cycle, akin to nobody beats the Chiefs. And that's when you get overextended and things go bad. Again, I want to emphasize, if I see any of you, if I see anyone, any clown say that I'm calling the top here, I will find you. And I have a special set of, we're not there yet. But you'll want to keep your eyes open for the signs over the next few months. So let me go over all the ways people are making money, right? We like that. And then tell you how historically they have run out of steam. Not one of these has run out of steam yet. I'm giving you a flag. First, there's the reopening trade, which is about people getting vaccinated and the crisis being put behind us. I still expect a vaccine glut in the second quarter. But by then, we'll be looking for arms to jab, wherever those arms may be. And that's why we see relentless moves up in the restaurants, Darden, fringes, and the weaker retailers, L Brands, Macy's, Foot Locker, Kohl's. As I've told you before, Disney and Boeing are my favorite reopening trades. I'm waiting for Boeing to announce some big orders. I think it's going to happen. No one is waiting for Disney to report. They're all buying it ahead of the quarter on Thursday because Disney's such an obvious winner when the world goes back to normal. Can you imagine what 2022 will look like when the movies and the parks are on fire and they also have Disney Plus on top of that? Oh, jeez. Okay, second theme that's working is housing. This is all about the deurbanization of America spurred on by COVID-19. We'll go back to the cities eventually, but the hybrid workplace has arrived and it isn't going anywhere. You go to the office a couple days a week, Zoom the rest of your time at home with your family. It's pretty great. Every home builder is booming, along with the rest of the housing food chain, Toll, Lennar, you name it. Third theme, industrials. How can you not own some industrials with the world's markets rallying? Everywhere's rallying. Every industrial I follow is flying. Not too late to buy Honeywell or Linde, the industrial gas company. We're going to hear from them later tonight. Fourth, energy. Despite all the electric vehicles in the way, short-term oil prices have been roaring. Remember, Trump was the drill baby drill president. Biden's not too fond of drilling. He wants renewables. But what happens when you tamp down on drilling? Oil gets more scarce. Price goes up. Long-term, I think the industry's in real trouble. You don't want to own a fossil fuel play through 2030. But for the moment, they're cleaning up. Fifth theme, banks. It's been a while since they've been good. When you get to the point where there's enough economic activity to push up long-term rates, which is kind of happening, while the Fed holds down short-term rates, you get a nice yield curve that swells the bank's bottom line. A rising tide does lift all boats, which is why I actually like Wells Fargo a lot, especially since it's the cheapest of the bunch. I think Charlie Sharp is going to fix that place. Sixth theme, individual stock picking by newly empowered home gamers, by you. We have a massive new group of investors, young, terrific, feels like a throwback to the early days of 401k, except the new generation is a lot more rigorous, knows how to research. These newbie investors do their own homework and often find ideas that could look like the next Tesla, the next Apple, the next Facebook. They love anything Elon Musk touches, including Bitcoin. Tesla just bought $1.5 billion and says they'll eventually accept it in lieu of cash. When I look at the chart of Bitcoin, it gives me vertigo. But as major companies like Tesla and PayPal agree to take it into trade, you can absolutely own some as a means, a storehold of capital. The Merriman, my name for the Robin Hoodies and anyone else who's a new enthusiast, also stumbled on a bunch of overly shorted stocks like GameStop, then bought them aggressively to crush the hedge funds who gotten too greedy. I think the shorts were basically right about the fundamentals, but they didn't realize the trade had gotten too crowded, so they got steamrolled once it became clear there wasn't enough stock to go around. Well, it was a huge win, as long as you rang the register. Remember, I called him from my hospital bed, ripped out the catheter, gave the good call. The catheter thing's probably too much information. But at 300, told you to sell. Unfortunately, a lot of home gamers doubled down at that peak, and now they're getting burned. At least they can't blame me. The catheter hurt like, oh, get out. It's great that Reddit message boards can identify winners that Wall Street research is missing, as long as nobody's running a pump and dump scheme. As for all the craziness a week and a half ago, that's about the need for better trading infrastructure. More on that later. Finally, the one that is very mystifying and I'm getting worried about. Number 7, the Spac Attack. Nearly every time one of these special purpose acquisition companies announces that it's buying a sexy startup, the stock explodes higher. We've seen a ton of big wins. We have one on tonight. Don't fight the SPACs. Just remember the gains don't count until you ring some of the register. I'm not in favor of all. I want you to hang on. Take your basis out. Those are the 7 heavenly ways to make money in this market right now. But they can turn into 7 deadly sins if you're not careful. The reopening trade. That's hostage to the pandemic. We could get a load of new cases, especially this new South African strain, more resistant to the vaccines. I think we'll be able to get COVID under control. But we've been wrong about that before. Plus, if the stimulus bill fails, the retailers, they're going to take a hit. Housing. As the economy improves and rates go higher, still a long way away. The housing bull market will get hurt. That's inevitable. Could take years to become a problem, could take a year. Theme 3, the industrials. Look, these stocks only work if employment picks up and business quickly snaps back. If the recovery falters, they are insanely expensive on a price-to-earnings multiple basis. Energy. It sure looks good now, but that's because OPEC's being disciplined. Eventually, prices will get high enough that the Saudis will stop limiting production. And when that happens, oil producers will get hammered. Crude's at 58. Wouldn't surprise me if the Saudis open the tap at 60. Theme 5, the banks. Oh, they're great as rates don't, as rates kind of go higher, but not too high, because that puts real pressure downward on loan demand. Again, we're not there yet, but that's an inevitable part of the business cycle. 6, what happens to all these new stock pickers when they run out of good targets? There are only so many GameStops to go around applying for short squeeze. Without better clearing systems, a lot of merry men could get hurt. Finally, the 7th, and by far the most deadly sin. All of these companies with no earnings that are being pitched on the basis of revenue projections, including the SPACs. Many of these stocks are exciting, and they all seem to have a mission. But in recent months, we've seen more and more what I call celebrity SPACs. And the whole thing feels excessive. If you disagree with me, you're wrong. There will come a tipping point where we start getting glutted with low-quality SPACs, and the whole group collapses under its own weight. Again, we're not there yet. The bottom line, for now, we're in the clear. But you need to watch these 7 themes like a hawk, because eventually they'll turn ugly. Might take months, might take years. Either way, you don't want to stick around when this side of the page happens.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.